Yes. So now let us see the problem number 16. Mr. Sundar retired from service on 31st Jan 2018 after for 27 years 8 months. So after serving for, this is not after for, there is one word is missing, after serving for. Okay, so after serving for 27 year 8 months, he received a gratuity of 2,65,000. So gratuity information is given. He had 9 months earned leave to his credit, of which was he encashed and received 2,20,000. Earned leave encashment is also given, that is 2,20,000. His basic as on 1/1/2007 was 13,500 and the increment of 500 fell due on 1st October. Okay, so there may be a case of with increment and without increment. And he received HRA of 4,000 per month. And what happens, whereas the rent paid for the house is 5,000 per month. DA was fixed at 2,500 per month, 50% of which enters the retirement benefit. He commuted 3/4 of his pension and received 1,50,000. Compute all the things, all four concepts what is covered in this chapter we have to compute. That is taxable gratuity, taxable commuted pension, taxable leave encashment, and taxable house rent allowance. So there is one more concept which is not covered in this problem, is the retrenchment compensation. Whenever employer removes the employee from the job, in that case compensation is provided to him, that is provided to the employee. So that also there is some calculations, there is some rules that we have discussed. So now how to solve this type of problem? Before solving this type of problem, we have to know all the rules. Without knowing all the rules, it is impossible to solve this type of problem. So what we have to do now is just discuss all the rules once before going for this problem. All the rules once we will discuss. Yes, see this. Now what do you mean by gratuity? Yes, what do you mean by gratuity? Can you tell me, Anvit, what do you mean by gratuity? Gratuity means what? Gratuity means at the time of retirement, the amount given to the employee, or at the time of death, the amount given to the employee for the years of service rendered by the employee in one particular organization. Generally, in government, in the case of government employee case, what happens? This type of amount will be given at the time of retirement. That is known as gratuity. See this. Gratuity is an amount paid to an employee on his retirement or to his family member on his death in appreciation of his past service in the organization. The employer considers length of the service of the employee while paying the gratuity. So, in the case of government employee, you know, it is exempt from tax, no tax at all. But in the case of non-government employees, that means private employee, there are two cases. One is employees covered under payment of gratuity act. Second one is employees are not covered under payment of gratuity act. So first one we have to see non-government employee covered under payment of gratuity act. So there are three conditions for this one. A gratuity received is exempt to the least of the following. There are three conditions. Anything is among these three, whichever is less is exempt. So what is the first condition? 15 days salary, 7 days for seasonal employment, based on the last drawn salary for each years of completed service or part thereof in excess of 6 months. So this is the first condition. Second condition is statutory limit, that is 20 lakh. Third condition is actual gratuity received. Among these three, whichever is less is exempt and remaining is taxable. And one more thing, whenever employee covers under the gratuity act, salary means basic plus DA, and it does not include dearness pay, that is DP, even if it is considered for retirement benefit. Also, it does not include commission, even if it is given as a percentage of turnover. And salary is calculated by dividing last drawn salary by 26. Why 26? Because these are the number of working days in a month. So Sundays are not included. Yes, and in the case of piece-rated employee, 15 days salary is calculated based on average total wages, excluding overtime wages received during the 3 months immediately preceding the day of retirement. So this information is not that relevant. Only you have to remember 26 days in the month. After that covered, there is one more case of not covered. Non-government employee not covered under payment of gratuity. Again, there are three conditions. That is, in the previous covered employee, what we have discussed, last on salary. But for not covered employee, we have to consider salary or based on the average salary of 10 months. See this? Half month salary based for each years of completed service calculated on the basis of average salary for 10 months immediately preceding the months of death, retirement or termination of service. That means for gratuity, month of retirement is not included, excluded. Then the statutory limit, it was before 10,000. Now I have changed now. Now there is a recent amendment. Now it is changed to 20,000. So statutory limit is 20,000. Actual amount of gratuity received, that is the third one. And salary for this purpose, for not covered employee purpose, salary means only basic. But DA, DP, commission, if it enters the retirement benefit, then you can consider. Then what about if employee receives any gratuity in the earlier year? In that case, what happens? There is a statutory limit. From statutory limit, you have to deduct that amount. That is also we have discussed. Any doubt now regarding the rules? So just a briefing. I am briefing you out about the rules now. Yes. Anything you want to ask? Anmeet, Anuj, Anumanta?
No, sir.
No.
No, sir.
Just I am briefing you out. This and all we have done. So now commuted pension means what? Commuted pension means lump sum amount obtained by the employee at the time of retirement. If it is a part amount, that is installment amount, then it is does not come under commuted pension. Only if it is a lump sum amount, then only it comes under commuted pension. And for government employee, under all the situation, he is exempt from tax. But now we have to see the rules for private employee. In the case of private employee, there may be two situations. One is when the private employee receives gratuity, and second one is private employee doesn't receive gratuity. So first one, when he receives gratuity, what happens? We have to take the commuted value of 1/3 of the pension received if he receives gratuity. The commuted value means here full commuted value. That also we have to keep in mind. Then commuted value of half of such pension in any other case. That means if he doesn't receive gratuity, half of such pension. So why half of the pension? Half means 50%. So here what happens? If he doesn't receive gratuity, then exemption amount will be more. If he receives gratuity 1/3, 33.33%. In that case, exemption amount will be less because he will get exemption in the gratuity calculation also. That is why here exemption amount is less. Yes, and we have to take full commuted value. This is about commuted pension. Then about after that we discussed earned leave encashment. See this. After that we discussed about earned leave encashment. What do you mean by earned leave encashment? For every employee in organization, there may be some leave. For 1 year, they may get around 10 to 15 days leave. And if he doesn't take that leave will get accumulated over the years, over the period of year. Then after that, what happens? He can encash that leave. Whenever he encash that leave means he can convert that leave into cash. Okay, so whenever he converts that leave into cash, it is taxable when he is in the service. But when he encashes the leave after the retirement, in that case, what happens? There is two conditions. First, for government employee, he is exempt from tax. But we have to see for non-government employee what are the cases. So in the case of non-government employee, you see it is exempted subject to the maximum of the least of the following. So among the least of anything which is least, that is exempt. First one, 10 months salary based on average salary drawn during the last 10 months before retirement. So this is similar to the not covered employee of gratuity. But only thing different here is, what is that? Here month of retirement is included. For earned leave encashment, month of retirement is included. Whereas for gratuity calculation, month of retirement is excluded. Then second point, if you see, amount of salary based on the basis of average salary for the approved period for which earned leave have not been availed of. That means Suppose during the 25 years of service, he accumulated 9 months leave. So 9 months leave will be the approved period of leave. And statutory limit for encashment is 3 lakh. So, and one more thing, see this, it is noted that for the non-government employee, is entitled to an earned leave of not more than 30 days for each year of completed service. Similarly, salary means only basic, and DA, DP and commission you can take if employment provides or if it enters the retirement benefit. This is about earned leave encashment. So have you understood now earned leave encashment? What do you mean by earned leave encashment? Yes, tell me. Have you understood? Anuj,
Yes,
Anvir,
sir.
yes,
Yes, sir.
Hanumanta. Yes,
Yes, sir.
yeah. After this, there is concept of retrenchment compensation. Retrenchment means removal of employee by the employer. In that case, he has that means employee may get some compensation amount. See this, that compensation amount is determined as per Industrial Dispute Act of 1947. So there may be three cases. It is exempt to the least of the following. See these three cases. An amount calculated as per the provision of Industrial Dispute Act of 1947, or amount notified by the Government of India, that is statutory limit is 5 lakh, or actual amount received. That so in this case, as per the Industrial Act, that means for the first point, for this point, how to calculate the amount? See this, they have given the Industrial Act, the amount is calculated at half month's average salary for every completed years of service or part thereof in excess of 6 months. Suppose if it is 31 years, 7 month means we have to take 32 years. Part thereof means that is the meaning of that one. So if it is more than 6 months, we have to consider it as 1 year. If this is not given, 31 year, 8 month means then also then we have to take only 31 year if this information is not given. Based on the salary drawn for last 3 calendar months. Okay, that is about a retrenchment compensation. Then there is a concept of a voluntary retirement scheme, VRS. So for voluntary retirement scheme also there is separate rules and regulations I have mentioned. That is we have to see now. See this, the amount exempt to the extent of least of the following. So now there are, under first point there are two cases. First is last drawn salary, that is nothing but last month's salary into 3 into completed years of service, or last drawn salary into remaining months of service. Among these two, whichever is less, that will be the answer for first point. Then statutory limit is 5 lakh. Then third one, actual compensation received. Salary means only basic. DA, DP you can take only if it enters the retirement benefit. So that is about VRS. VRS means what? Employee before, so age of retirement is 60 years. Suppose employee decide to retire at the age of 55. In that case, what happens? 5 year service is due, isn't it? For that 5 year, he may get the amount. So that is the meaning of voluntary retirement scheme. Then there is a house rent allowance. So that is that we have discussed. So again there are three rules for house rent allowance. See this, actual HRA received by the employee for the relevant period, excess of actual rent paid over and about 10% of salary for relevant period, an amount equal to 50% of salary if accommodation situated in Mumbai, Chennai, Delhi, Kolkata, and 40% of salary if accommodation situated in all other cities. Salary means what? Only basic. You can take DADP commission only if it enters. Relevant period means what? Only during the period where SSC stays in the rented house. That is known as a relevant period. So these are all the rules are covered under chapter number 3, tax free income. So have you understood now all the concept now? In brief means meaning. Have you understood?
Yes, sir.
Yes.
Yes, sir.
Yes. So now we can, after knowing all the rules, we can easily solve this problem. See this. Now compute taxable gratuity. First, one by one we have to see now. Compute taxable gratuity. Whenever, if you see this type of problem, so now we have to concentrate only about gratuity. Whether in the problem it is mentioned that whether is covered or not covered under Payment of Gratuity Act, whether that information is given, can you tell me?
No.
No, that information is not given. Whenever information about covered, not covered employee is not given, in that case, what we have to assume? What we have to assume?
Not covered.
Not covered. Not covered, we have to assume. Correct answer. So here we'll assume that Sundar is a non-government employee, that means private employee, and he is not covered under payment of gratuity act. So now one more thing is date of retirement. Date of retirement is 31st Jan 2018. That means here he served for 27 year 8 months. That is also they have given in the question. Okay. So increment starts when from 1st October they say. 1st October 500 per month. See this. 1st October 500 per month. Basic of the last year is given. 1/1/2017 is January 2017 his salary was 13,500. From October onwards 500 increased means what? Can you tell me now? What was his salary from October onwards? Can you tell me?
13,500.
No, no, no. October onwards
14,000.
14,000. Answer is 14,000. 13,500 plus 500. 14,000 from October onwards. Before October 13,500. So now that information also we know. So if you see here, assumed that SSC is not covered under payment of gratuity act. Now, whenever he is not covered under payment of gratuity act, we have to remember the rules of not covered. What is the rule? Half month salary based on average salary of last 10 months preceding the month of retirement for completed years of service. So we want a 10 month salary. So how to calculate 10 month salary? First we have to calculate 10 month salary. So salary for 10 month means here can you take January now here? Can we take January?
No, sir.
No. Why we should not take January? Can you tell me? What is the reason?
It's on the last day.
No, no, no. Not for that reason. Because in the case of gratuity, month of retirement is not included. He retired in January, right? That is why January is not included. Suppose if he retired in February, February is not included like that. So now he retired in January, January is not included. Excluding January, last 10 months. What and all you can you tell me now? Can you tell me? Yes, tell me. Excluding January, previous 10 months, what and all? Can you tell me?
January, December, November, October.
No, January is not
September.
there. January
No,
itself
like
is not there.
December to March.
December to March. Now correct. So this is our last 10 months. So now once after knowing the last 10 months, we want to know basic without increment. So basic without increment means from March to September. How many months? March to September. How many months?
9 months.
March.
7 months.
7 months. Yeah. March, April, May, June, July, August, September. 7 months. So, basic without increment is 7 months. Now it is very clear. See this. 13,500 into 7, that is March to September, that is 94,500. From where we got 13,500, that is given in the question. Is the basic as per January 2017 is 13,500. Yes. So now it is very clear. Why till September? From October onwards 500 extra he will get. That is why till September we have to do first. That is basic without increment. 94,500. Now basic with increment. That is for next 3 months. Because our duration is from March to December, isn't it? 10 months. So 7 months without increment means 3 months with increment. That is from October to December. So now we will get 500 extra. 13,500 plus 500. So what is the amount now? What is the amount? 14,000. 14,000 into 3, 42,000. So now we can easily get the total salary now. Total salary, that is basic without increment plus basic with increment, but there is a DA. Now for a DA, very very important. For not covered employee, what do you mean by salary? What do you mean by salary for not covered employee? Can you tell me?
Basic plus DA.
No, no, wrong. For not covered employee, salary means only basic. That is for covered employee. Covered employee salary means basic plus DA. Now we are solving not covered employee under Payment of Gratuity Act of 1972. That means salary means what? Only basic. We can take DA when only if they provide in the problem that it enters the retirement benefit. So now we have to check the problem once again. Whether it is given in the problem that it enters the retirement benefit. Can you tell me?
No, sir.
No? Are you sure? What about this
Given,
information?
given.
See this information now.
Yes, sir, given.
Given DA was
Only
fixed.
50%.
Sorry, Anvit. Tell me. Anvit.
Only 50% for the this thing, the retirement benefit.
Yes. So we have to take only 50%. DA was fixed at 2,500 per month. Out of 50% was taken for retirement benefit. So what we have to do now is 2,500 into 10 because we want salary of 10 month for not covered employee. So first you do 2,500 into 10, you will get 25,000. 25,000 into 50% you do. 25,000 into 50%. Then you will get a DA.
12,500.
12,500 will be our DA. So now we can get a total salary amount. That is 94,500 plus 42,000 plus 12,500. Total salary will be 1,49,000. But we want average salary of last 10 months. This is the salary for last 10
Shared
months.
by 10.
We want to divide it by 10 now. 1,49,000 divided by 10, we'll get average salary. That is 14,900. This is our average salary for gratuity. Now, after this one, we have to see about commuted pension because there is a commuted pension also, right? So, working note we have to do now for commuted pension also. See this. Since SSC receives gratuity, commuted pension is exempt up to 1/3 of the full commuted value. So, how you know that SSC receives gratuity by seeing this question? Can you tell me? That is given. See this. Here, he receives gratuity. Now it is very clear. SSC is receiving the gratuity. That means what? Commuted pension we have to take 1/3. If SSC doesn't receive gratuity, then commuted pension we have to take 1/2. So that is a difference. So now here we have to take 1/3. So that is about commuted pension. Next about earned leave encashment. For earned leave encashment also we have to do the working note. So, for earned leave encashment and for gratuity calculation working load, what is the difference? Can you tell me? What is the difference?
Gratuity is while retiring, no, sir. But earned leave is after every year.
Earned leave is after every year, but under this, earned leave encashment comes only when if we opt to take that encashment of leave after retirement, then only it comes under encashment of leave. Here, difference thing is, I will tell you. In the case of gratuity calculation, month of retirement is not included. But in the case of earned leave encashment, month of retirement is included. That is why here we have to do separate working note. See this, now I will tell you. Average salary for leave encashment, what is the rule? Rule is same. What is the rule for leave encashment? We have discussed the rule. What is the rule now for leave encashment? See this. Again, we have to see the rule now. See the rule. Same. It is a rule is same as of not covered employee. See this. First rule. What is the rule for an encashment? 10 months salary based on average salary drawn during the last 10 months before retirement. So here also we want 10 months salary. So in gratuity calculation also we want 10 months salary. So now we'll see now. See this 10 months salary we want for encashment of leave. So now basic without increment. How many months? We have to see now. And before that, 10 month means now what and all included? You tell me now. By seeing the question, 10 month means what and all included? Can you tell me?
January is also included, so April to January.
April to January, correct. In the previous gratuity calculation, it was March to December. But here, April to January, 10 month means. So now let us see. Now, in that case, what will be our without increment? Increment falls from 1st October. So, without increment is April, May, June, July, August, September. Only 6 months. Only 6 months without increment. But if you see gratuity, there was 7 months, isn't it? Isn't it?
Yes, sir. Yes,
Yeah.
sir.
So that is why here 6 month we have to consider. We have to consider 6 months. See this. Average salary for leave encashment, that is April to September, 13,500 into 6, that is 81,000. Now, after that, basic with increment, October to Jan, now 4 month. In the previous gratuity calculation, it was 3 month. Now it is 4 month. So October, November, December, January. So from October onwards, 500 extra. So 13,500 plus 500. 14,000 into 4, 56,000. After the DA enters, that is why we have to take. So before that, for the purpose of encashment, what do you mean by salary? What do you mean by salary for the purpose of encashment? What do you mean by salary?
It's only the basic.
Only the basic, correct. Only the basic, but here DA enters, that is why we have to take DA. DA they said 50%. So we know that is 20 DA per month given 2,500. 2,500 into 10, if you do 25,000 you will get. Of that you have to take 50%. So DA calculation is same for both the working group, 12,500. But total amount will change. See this now. We want average salary for leave encashment. So we have to add all the things. 81,000 plus 56,000 plus 12,500. So what is our total? 1,49,500. This is for 10 months salary. But we want average salary. So divided by 10 we have to do. So the answer is 10 months average salary 14,950. Now, what is the difference here? See this, 1,49,500 for encashment. For gratuity, how much was the amount? 1,49,500 difference is there. Have you understood now? 500 difference is
Yes,
there.
sir.
Yeah. So that
Because
is
of the 1 month increment.
because of 1 month increment, correct? Yes, that is why. So after this, there is a HRA calculation also. For HRA calculation, SSC retires on 31st Jan of previous year. That means first we have to see the financial year. What is our financial year? From when it starts financial year?
2018.
No, no. From which month financial year starts?
April, April.
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 April to
April.
March. April to March. But SSC retires on 31st Jan means its relevant period will come to an end on 31st Jan. So how many months?
9 months.
How 9 months? 10 months.
10 months. 10 months, sir.
Yeah, 10 months. So HRA, whenever we are calculating HRA, we have to consider the relevant period. Relevant period means what? Here HRA, a relevant period means the period in which the SSC stays in the
10
rented house.
months.
Yeah. So after the retirement, he won't stay in the rented house. Of course, he will move on to his own house. That is why only 10 month calculation we have to do. That is for the period for which he was employed in the previous year. Yes. So all these working note we have to do first before solving the problem. Now one by one we can do the format. So first one, computation of taxable gratuity. Now format is of computation of taxable gratuity. See now there is three column we have to do, particular and two amount column. First thing we have to write is gratuity received. Gratuity received is given in the question. If you see this, where it is given gratuity received. Can you tell me the gratuity received?
It's 2,500. No.
No. I have blocked it. See.
Okay. This thing, 2,65,000.
Yeah, this is our gratuity received. 2,65,000 is the total gratuity received. That is why you have to write this in the outer column. Gratuity received is 2,65,000. We have written in the outer column. Less means there is a three condition is there, right? That we have to write here. Less exempt under section 10 clause 10. Why 10 clause 10? It is a section for gratuity. So first one, actual amount received. That is nothing but whatever you write in the outer column, that same amount you have to write here. Actual amount received and gratuity received is same, 2,65,000. Next is statutory limit. Statutory limit is fixed. That is either for covered also 20 lakh, for not covered also 20 lakh. So you have to write 20 lakh. That is fixed amount as per the law. Then last condition is half month salary based on last drawn salary for completed years of service. So here we want last drawn salary. So now last drawn salary how to calculate? Can you tell me? Can you tell me last drawn salary how to calculate now? He retired in January. We are doing a gratuity calculation. So we want the salary for the month. Can you tell me which month salary we want? No, last month salary means.
January
salary. But January salary we should not take because month of retirement is not included.
December.
December salary we want now. December salary. Can you tell me what was his salary in the month of December? What was his salary?
14,000.
14,000. That is 13,500 plus 500. And when is not covered, salary means only basic. But here DA also enters, they say. So what we have to do? 2,500 is per month. We want for 50%, right? 2,500 into 50%. What is the answer?
1,250.
1,250.
250.
Yeah, 1,250. So now, but here 14,900 is written. Why 14,900? Half month salary for completed years of service. 14,900 is coming. Why is that? Okay. So
14,900 is this thing, gratuity.
Yes, because this half month salary is for not covered employee. So we should not consider last drawn salary. So see this, I got confused because I was discussing the rules of covered employee. If it is a covered employee, then we have to consider last drawn salary. But this is a case of not covered employee, right? In this case, we have to consider average salary of last 10 that we have already calculated. Yes, average salary of last 10 months. Where we have calculated? See this working note. What is the answer?
14,500.
No, not 14,500. 14,900. Here it is 14,900. See this.
900.
Yeah, 14,900 is average salary of last 10 months. So from this average salary, that means what is the rule? Rule is half month salary based on average salary of last 10 months preceding the month of retirement for completed years of service in the case of a non-government employee not covered under Payment of Gratuity Act of 1972. So 14,900 half they said, so divided by 2, 1 by 2. 14,900 divided by 2 into completed years of service. So now let us see the question. So how many year he served? 27 year 8 month. So why we are not writing 28? Why we are not writing 28? Why we are writing 27?
Because he is done only till January. The 20th year is not completed.
Yes. So here in the rule they have not mentioned part thereof in excess of 6 months we have to take as 1 year. That is there only for covered employee. For not covered employee that is not there. Suppose this question was of covered employee, in that case we have to take 28. But here it is not covered employee. That is why 8 month is ignored. Only 27 we have to take. 27 year. That is why into 27. So 14,900 divided by 2 into 27. So what is the answer? Answer is 2,01,150. So among these three, which is least now? Can you tell me? Which is least? Minimum. Which is minimum?
21,150.
Yes. That is 2,01,150 is least. So on this amount there is no tax. This is a what? Exemptable amount. On this amount there is no tax. But we want what? Taxable gratuity. We want taxable gratuity. So how to get taxable gratuity? Gratuity received minus exemptable amount. That is 2,01,150. If you deduct, you will get taxable gratuity as 63,850. On this amount there is a tax. So this is now done. One part is done. Computation of taxable gratuity is over. Now next thing we have to do is computation of taxable commuted pension. So here commuted pension received we want. Whether it is given in the question, commuted pension received. Can you tell me whether it is given in the question? Where they have mentioned? See this. What was his commuted pension amount?
1,50,000.
1,50,000.
1,50,000.
Yeah, 1,50,000 is commuted pension. So write it in the outer column. Commuted pension received is 1,50,000 less exempt under section 10 clause 10A. Why 10 clause 10A? This is the section for commuted pension. For gratuity 10 clause 10. For commuted pension 10 clause 10A. Now what is the rule? Here he receives the gratuity. That is why 1 by 3. 1 by 3 of full commuted value you have to take. If they have given half 3 by 4, then also we have to take full committed value. So that is why once again we have to see the question now. Here they said 3 by 4th of the pension and he receives 1,50,000. So this 1,50,000 is not full value. We want full value. How to get the full value? We want to do the reciprocal of this one. Can you tell me the reciprocal of 3 by 4?
4 by 3.
4 by 3. Yes. If it is 1 by 2, 2 by 1, 3 by 4, 4 by 3. So here reciprocal of 3 by 4 is 4 by 3. So 150 into 1,50,000 into 4 by 3. We have to do first in order to get the full committed value. 1,50,000 into 4 by 3, we will get the full committed value into 1 by 3 because that is the rule. 1 by 3 of the full committed value. So into 1 by 3. So if you do like this, you will get the amount as 66,667. So this amount is exempt. 66,667, this amount is exempt. Remaining is taxable. That is 1,50,000 minus 66,667, 83,333 is taxable commuted pension. Any doubt till here?
Okay.
No?
No, sir.
Yes. So now we have completed two part. Now again two more part is remaining. That is computation of taxable leave encashment. So now again we have to do the format 3 columns, particular and 2 amount column. Amount received on leave encashment. Where it is given. Once again we have to see the question. Amount received on leave encashment. See this. Here they have mentioned. See this. What was his amount?
2,20,000.
2,20,000. 2,20,000 is amount received on leave encashment written in the outer column. Less exempt under section 10 clause 10AA. 10 class 10AA means what? Here that is a section for earned leave encashment. So actual amount received. Actual amount received is same. Whatever you written in the outer column, you have to write in the inner column. Actual amount received 2,20,000. Statutory limit for earned leave encashment is fixed, no change. That is 3 lakh. You have to remember statutory limit is 3 lakh, fixed amount. 10 months salary. Next rule is 10 months salary based on average salary of last 10 months. So we want average salary of last 10 months. Where we can get average salary of last 10 months by seeing the working note of average salary of leave encashment. What is the average salary? Can you tell me now?
14,980.
14,950. Yes. See this. 14,950 is the average salary for leave encashment. So 14,950 into 10 months salary they say. So 14,950 into 10. That is 1,49,500 you will get. Then there is a salary for approved period of leave. That is condition number 4. So that is based again. This approved period of leave is based on average salary. Average salary is 14,950. It is clear. Where is approved period of leave is given in the question. Where it is given. See this information. How many approved period of leave he has?
9.
9 months. So 9 into 9 you have to do. Average salary into 9. So you will get 1,34,550. So among these four, whichever is least is exempt. Which is least?
Last one.
Last one is least. That is why it is written in the outer column. So on this amount, no tax. 1,34,550, no tax. So remaining amount is taxable. 2,20,000 minus 1,34,550. Taxable earned leave encashment is 85,450. This is now third part is over of the question. Now last one part is remaining. That is computation of taxable HRA. So when SSC retires in this question, can you tell me when he retires?
January.
January. So financial year starts from April, so only 10 months. February and March is not there because he retires in January. So April to January, 10 months. 10 month we have to calculate. HRA received, where it is given. See this. HRA received is 4,000 per month. So 4,000 into 10 we have to do. 4,000 into 10. If you do,
41.
yeah, you will get 40,000. You have to write it in the outer column. HRA received 40,000 outer column. Lesser. Let's see, you have to do exempt under section 10 plus 13A. Least of the following. So first, actual amount of HRA received or actual HRA received. This is received for 10 months because relevant period here is 10 months and not 12 months because he retires in January. So same thing. Whatever you write in the outer column, you have to write in the inner column 40,000. Then second thing comes is rent paid above 10% of salary. So now we want rent paid information, whether it is given in the question, rent paid information. Whether it is given, see this,
5,000 per month.
5,000 per month is a rent paid. So rent paid information is given. So for how many months we want rent paid now? As per the relevant period we have to calculate. What is our relevant period? What is our relevant period here?
10 months.
10 months. So for 10 months we have to calculate rent paid. So 5,000 into 10. 5,000 into 10 you will get rent paid as 50,000. Now next thing we want is a salary. We want a salary. So whenever we are calculating salary, which working note information you are going to take? Gratuity or earned leave encashment?
Gratuity.
Why gratuity? Wrong. Gratuity information we should not take. Why? Because their January is not included. So that information we cannot take for HRA. But if you take the information of earned leave encashment, their January is included. So we have to take salary, this earned leave encashment information. Earned leave encashment working note information we have to take. So here, what was the salary here for 10 months salary? Can you tell me? 1,49,500 with the help of working note of earned leave encashment salary for 10 months. See this. Have you understood?
14,950.
1,49,500. No, not 14,950. That is average salary. We want 10 months salary. This information. We don't want average. We want 10 months salary for HRA. That is 1,49,500. Or else you can take average also. 14,950. Then you have to do 10. Into 10 you have to do. Into 10. Multiply by 10. Then also you will get the same answer. That is 1,49,500. Sorry, 1,49,500 is 10 months salary. Then of that we want 10% salary, isn't it? We want 10% salary. So take 10% on 1,49,500, that is 14,950. So rent paid above 10% of salary is nothing but rent paid minus 10% of salary. So 50,000 minus 14,950. 50,000 minus 14,950 you will get as 35,050. 35,050. Then third point is 40% of salary. Why 40% of salary? Can you tell me? Why not 50%?
City is not mentioned.
City is not mentioned. Correct answer. If city is mentioned, then 50%. Here city is not mentioned. That is why what we have to do here, we have to take 40% of salary. Again, salary means here. Salary means 10 months salary. All relevant period calculation. 10 months salary, you know, 1,49,500 into 40%. That is 59,800. So among these three, whichever is least is exempt. Which is least?
Second one.
Second one is least. So 35,050 is least, that is exempt. So remaining is taxable. That is 40,000 minus exemptable amount. So taxable amount is 4,950. So this is a taxable HR. So all the four parts of the problem we have solved. So any doubt regarding